Good evening, and welcome to our detailed, in-depth analysis of President Trump's sweeping policy initiatives, strategically designed to reverse the economic damage attributed to the previous administration. Tonight, we explore how Trump's administration has implemented aggressive measures aimed at reducing costs and restoring prosperity for American families facing burdensome Biden-era economic policies. From lowering everyday expenses to slashing regulatory burdens, these policies mark a dramatic shift in government strategy that promises immediate relief for consumers and workers alike. The current administration emphasizes emergency price relief, directing executive agencies to act swiftly in delivering tangible savings and combating the rising costs imposed under the prior leadership. One of the administration's headline actions includes reducing egg prices, a symbolic move aimed at easing financial pressures on households across the nation during challenging economic times. President Trump mandated that all department heads focus on cost-cutting measures, ensuring that every action taken translates directly into enhanced affordability and improved standards of living. This directive underscores a broader commitment to not only lower prices, but also to stimulate economic growth by empowering the American worker with greater disposable income. In tandem with price relief measures, a new National Energy Dominance Council has been established to maximize domestic energy resources and drive down overall energy costs. The Council's mission is clear: harness America's abundant energy supplies to ensure lower utility bills, bolster energy independence, and secure a competitive edge in global markets. Since these reforms began, crude oil prices have fallen over 5%, a significant drop that benefits consumers at the pump and contributes to broader economic stability. Equally impactful, the administration has postponed several Biden-era efficiency standards for appliances, preventing steep price increases that would have burdened American families with unnecessary expenses. For instance, proposed rules for central air conditioners were set to add more than $1,000 to their cost, a measure now deferred in favor of immediate consumer savings. Similarly, gas water heaters and stoves faced dramatic price hikes under the previous standards, but these measures have been postponed to keep essential household costs manageable. Additional postponements affecting clothes washers, dryers, and even light bulbs further illustrate the administration's determination to shield consumers from escalating prices and undue regulatory impact. Beyond specific product relief, a sweeping regulatory rollback is underway, requiring agencies to identify and eliminate 10 outdated rules for every new regulation they introduce. This aggressive deregulatory approach seeks to dismantle layers of bureaucratic red tape, thereby reducing operational costs and spurring innovation across both public and private sectors. Analyses indicate that in 2023, federal regulations cost American households nearly $15,188 each, while alternate studies estimate the burden reached over $3 trillion in the previous year alone. These staggering figures highlight the heavy toll of excessive regulation on everyday Americans, reinforcing the administration's commitment to restoring economic balance through decisive action. At the forefront of these efforts is the newly activated Department of Government Efficiency, tasked with rooting out bureaucratic waste and redirecting funds back to taxpayers. Within weeks of its launch, this department has reported billions in taxpayer savings, a promising sign that streamlining government operations can yield rapid, measurable benefits. In another bold move, the administration has rolled back the controversial Biden-era electric vehicle mandate, signaling a renewed focus on consumer affordability and market-driven standards. By resetting corporate average fuel economy standards, the government aims to ease the financial burden on buyers while promoting a more competitive and flexible automotive industry. Noted economist Mark R. Jacobson has weighed in on these changes, emphasizing that even modest increases in fuel economy standards impose significant costs on consumers, especially those with lower incomes. Jacobson's analysis estimates that a 1 mile per gallon increase in CAFE standards initially costs all income groups approximately 0.5% of their annual earnings in the first year alone. Over the longer term, however, these increases prove even more regressive, as they tend to drive up the prices of used vehicles and disproportionately affect households earning under $25,000 annually. In contrast, higher-income consumers face a relatively smaller impact, with increases translating to only a fraction of a percent of their overall income, underscoring the policy's uneven economic effects. These fiscal considerations have fueled vigorous debates among economists and policymakers, with proponents arguing for immediate cost relief and critics warning of long-term market distortions. Despite the controversy, the administration remains steadfast, emphasizing that the recalibration of regulations and standards is a necessary step towards sustainable economic renewal. The overall strategy hinges on liberating the market from excessive oversight, thereby unleashing entrepreneurial potential and driving innovation in key sectors of the economy. Supporters assert that reducing burdensome standards will not only lower prices, but also create jobs and stimulate private sector investment across a broad spectrum of industries. Meanwhile, investors and market analysts are cautiously optimistic, noting that the rollback of regulatory measures has already contributed to positive shifts in consumer confidence and business sentiment. Critics, however, argue that while immediate savings are evident, the long-term consequences of weakened environmental and efficiency standards remain a subject of intense debate and concern. This ideological divide reflects a broader political battle over the appropriate balance between regulation and deregulation in fostering a robust, competitive economy in today's global marketplace. As these policies take hold, political leaders on both sides of the aisle continue to scrutinize the administration's approach, questioning whether the short-term benefits justify potential long-term risks. Proponents of the current strategy highlight the tangible relief experienced by American consumers, citing lower energy bills and reduced appliance costs as key indicators of success. Conversely, opponents caution that curbing regulations too rapidly could undermine environmental protections and compromise efforts to modernize critical infrastructure for the future. In the midst of this contentious debate, policymakers must navigate complex trade-offs, balancing the need for immediate economic relief with sustainable, forward-looking regulatory frameworks. The Trump administration's swift and decisive actions signal a fundamental shift in governance, one that prioritizes deregulation and fiscal discipline as essential components of national recovery. While early results show promising reductions in costs and bureaucratic inefficiencies, time will tell whether these measures can deliver lasting economic benefits without sacrificing critical protections. For now, the evolving policy landscape remains a dynamic battleground, inviting ongoing analysis as the nation watches closely to see how these transformative decisions reshape the future of American prosperity.